Let's check back in on shares of Chevron after reporting first quarter results, which I thought were great. I think the stock doesn't know what it's doing. So joining us now on a CNBC exclusive is Chevron CEO Mike Wirth. Mike, always great to have you on the show.
Morning, Jim. Good to see you.
Mike, I see many good things here. Right? Permian, absolutely terrific. Global, great. Of course, we have to talk about the acquisition. But I think that I've got two other acquisitions that I like. You did a renewable energy acquisition, and you did PDC, which was Colorado. So I'm asking, rather than go to the big dog that we may have to talk to that isn't complete, how are those and how'd they help you?
Well, Jim, you're right. It was a really strong first quarter. And, of course, those acquisitions, along with our base business, contributed to strong operational performance, strong financial performance, and strong shareholder returns. Operationally, this was the highest first quarter production in the history of our company. And first quarter U.S. production was up 35% versus last year. On financial performance, it's the ninth straight quarter with adjusted earnings greater than $5 billion and an adjusted return on capital employed greater than 12%. And all that translates to really strong returns to shareholders. This is the eighth consecutive quarter where we've returned over $5 billion in cash to shareholders. So strong contributions from our core ongoing business and, of course, important contributions from the recent acquisitions.
Well, in the meantime, you also, I'm not saying that you sell yourself short, but the things you're doing environmentally, I want to mention because you're part of what I regard as the pragmatic energy complex. And I just want to give you the floor for people to know that we're not going to roll back the things that are involving climate change because you're at the forefront of being pragmatic and doing the right thing.
I think you're using an important word, pragmatic. I use the word balanced as well. We're investing in things that we think can bring benefits today and things that fit with our core competencies. And so in the most recent quarter, we sanctioned a project to increase oilseed processing capability to help grow our biofuels business, where we're the second largest biofuels producer in the United States. We also sanctioned a project in California to take an oil field where we've got solar production today to support our operations. And we've got excess solar capacity, which we will now use to generate green hydrogen and supply that initially, at least, out to retail stations for vehicle transportation. So these are things that fit with our competency, fit with our asset base, our customers, and things we can do today that help contribute to addressing the desire for a lower carbon energy system.
Mike, it's David. A lot of focus as well on the pending transaction to acquire Hess, and I wanted to just ask a few questions around that. First of all, when do you think you're actually going to schedule a shareholder vote, or when are they going to schedule a shareholder vote, and when do you believe you'll be in substantial compliance with what the regulators have asked in terms of the antitrust review?
Yeah, David, first of all, I think, I'm glad you're talking about shareholders. This is a transaction that is good for shareholders of Hess, the shareholders of Chevron. It's good for the industry in creating a premier energy company that's well positioned for the energy transition. And it's good for the people of Guyana and the country of Guyana. We expect the mailing on the Hess proxy to go out before the end of April and a shareholder vote to be held late in May. So that's upon us here. And we've been working constructively with the FTC. We respect the role that they play in the oversight process on transactions and expect to certify compliance with their second request here by mid-year and work our way through the process with them by mid-year. So both of those things on track here in the second quarter.
Right. The unexpected part of this, of course, has been what is a dispute now with Exxon over whether, in fact, as part of their joint operating agreement in Guyana, where they own 45%, they have a right of preemption. That's being arbitrated now. Mike, how long is that going to take? And are you getting the sense that Exxon would like to push this arbitration out as long as it can?
Well, the arbitration process is really set by the arbitration tribunal, and so we have to respect their procedures in this, so we don't control that. At an investor conference last month, Exxon suggested that 5 to 6 months should be sufficient. We certainly believe that's sufficient time to address what's a pretty straightforward interpretation of contractual language. And we've worked with Hess, who's really party to this joint operating agreement. And I think in their disclosures have, and we've indicated in our disclosures that we've suggested a third quarter hearing and a fourth quarter resolution would be appropriate. So we're working with Hess to move this along expediently. And we think that's in everyone's interests. Yeah,
Darren Woods was a guest earlier on Squawk Box, and he said, listen, we're not interested in making a play. These are his words for Hess. We're not interested in a transaction on Hess. But he continues to say it's about protecting the value they created. And, of course, they believe that they have that right of first refusal. What do you say? And is there any chance that we can actually, those of us who are trying to figure it out, see the language that is at issue here, given it would help the market decide who's got the upper hand?
Yeah, I think, I'll let Exxon speak for what their intentions are. We're not a party to this agreement, and it's a confidential agreement. And so that anything that would relate to making terms of this agreement public is something that really is the province of those that are party to the agreement, and that would be, Exxon, Hess, and CNOOC. And so, I think those questions are probably best directed to them.
Right. Although, just to make it clear, if in fact you were to lose this arbitration, you're not going to buy Hess.
There's a condition precedent that needs to be satisfied, and if an arbitration judgment in the event it were to go against Hess's interpretation of the contract, and we feel very confident that their interpretation is the correct one, then that condition wouldn't be satisfied and the transaction would not close. Correct.
All right, so Mike, let's talk about the price of oil. I understand. I think there's about a $5 war premium is the way I look at it. Where we have an inflation problem in the country, where would oil be trading if we didn't have problems in the Mideast? And do you think that the United States can be a swing producer that actually get the price down?
Yeah, certainly for the last decade or so, the U.S. has been the producer that's met most of the demand growth in the world at the margin. Production in the U.S. is still growing, although not at the same rate it was earlier this last decade. Demand is growing pretty strongly, up a couple million barrels a day last year, probably another 1.5 million barrels a day this year. And so while there may be a slight risk premium in the market, we also have a market that's pretty finely balanced. Inventories that are a little bit on the lower end. And I think we'd see still pretty decent commodity prices in this environment. But as you know, Jim, it's a volatile world, and we have to be prepared for ups and downs. We're prepared for volatility. We've got a strong balance sheet with net debt in the single digits, and we're very confident in the future in any price environment, which is why we raised our dividend 8% earlier this year and continue to have now a track record, 37 consecutive years of increasing our dividend. Dividend payout is 4%, which is almost 3 times what the S&P 500 is, and over the last 5 years, we've grown it at a rate 30% higher than the growth rate of the S&P. So we're confident in the future, and we're prepared for volatility in commodity markets.
Okay, so let's talk about what could make things difficult. You have the Permian. It looks like you're finally getting enough pipe from the Permian to bring that to market. It wasn't the case. And then you have the president calling for a pause in LNG in 2028, which would be devastating, I think you would admit, because these projects have to be decided now for 2028, so there's a lot of them that are being shelved. Do you have enough pipe, and do you have enough export?
We do have offtake capacity out of the Permian. We've got export capacity, and so our company is well positioned for market vagaries in terms of transportation and exports. But I think the broader point you make is, it's a good thing for the world that the U.S. is an innovative energy powerhouse. It's a good thing for our allies. It's a good thing for our economy. And it's a good thing that we've got dynamic, strong companies in this industry that have invested in U.S. energy. As at the same time, we're reducing carbon, to our earlier discussion. And we need to have a policy environment that encourages investment, because not only does our economy rely on it, but those of our allies do, and the world economy does. And so we need policies that are predictable, are consistent, that protect the environment, but that also encourage investment and development of the resources that this country has that are vital to our security.